Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 29, 2021. I want to talk about Workhorse. Workhorse is a electric vehicle truck company. They provide last mile service. They got over 381 trucks in 21 states and it's really the way to go forward. In the United States, there is a truck driver shortage, and this technology to autonomously drive these trucks can do very well as we go forward. With that, let us jump in here and get started. As you see here, these guys have got over 381 trucks in 21 states, and you can see the coverage here. They got a lot of coverage here in multiple states here. So with that, as you look forward here, they also provide a multiple operating and efficiency data updated every 10 seconds. So that way, you can understand how is your truck, how is the consumption, how is the efficiency. So you're all equipped with this dashboard here. And as you look forward here, they also have workhorse aerospace here. They have this you know um, drone, as you can see here. This will be also good. As you know, many of the delivery companies, they want these drones, and these guys are really pioneers trying to deliver a nice multifunctional drones here. This can be a good one for package delivery as you go forward. And as you look through here, Workhorse Group is a technology company. They manufacture, build, and sell battery electric vehicles here, and they also have this drone platform, and they also provide some telematics here to monitor performance of these trucks. As you look through here from a stock perspective, it was doing great in 2019, and even 2020 it's done great, as you can see here. But off late, as you can see here, it's been a little bit down in 2021 here. This is where we got to take a look and see if it's worth buying at these levels. As you see here, with any new technology, there's a hype cycle. There's a lot of hype around EV back in 2020. That's why stock shot up here. Now the reality sinks in. They have more than 1 years of operations here. Now they have to provide comparable revenue here. That's why stock is struggling a little bit. But as you can see here, there may be a slow consolidation here. So this could be a turning point. So we'll find out. So as you look through here from an analyst consensus perspective, right now it's a moderate buy. We got two analysts saying buy, two hold, and zero sell. That's why it's a moderate buy at this point. We can jump in and look a little more into the detail. Stock price is just $6 right now. Market cap is just 838 million. So as you look through here, shares are rising according to Benzinga, which is obvious. And we got here three lightning quick growth stocks here. This is one of them according to Motley Fool. This is going to be a good one. And as you look through here, they have a lot of these leadership went away, and they have new leadership here. And it looks like Cathy Wood is also dumping the stock back in October. We'll see if it works. Cathy, buys and sells time to time. That may not be a huge alarming story, but we'll figure it out. So as you look through here, we got Rick here, who is the Chief Executive Officer. He came in earlier this year. He had relevant industry exposure, as you can see here. He was in various roles. He was with the Delphi Technologies, and he was with various other companies here. So relevant, automotive experience here. That makes him the right choice for this role here. And right now we got just 52%, 3.7 approval rating here. Given he's relatively new, it will take some time for him to establish. We'll give him some more time and take it from there. And as you look through the numbers here, from a numbers perspective, from a annual earnings perspective, I think they're doing pretty good here. After a series of negative earnings per share, finally in 2020 they notched a higher positive earnings per share. And from an annual sales perspective, it was great when there was very little sale. Comparables is easy. Now they have to look at the comparables and beat them. That's why it's a little difficult for them, but still 2020 was a good year for them. And as you look through shares outstanding, this is something I don't like too much here. I would love to see shares outstanding steady or decreasing. Here it's increasing. If it is increasing, it's okay. If we have sales also increasing, but in here we got outstanding shares increasing, but sales is at a tepid rate here. So we got to watch out this carefully. And from a quarterly revenue perspective, I think they did great here. As you look through here, last quarter 630 did a nice jump here. But as you can see, your numbers are low here, just 0.5 mil, 1.2 mil. This is a really low number. So we don't need to hang our hats on this because really low number right now. That's why the comparison looks exaggerated. And as you look through here, profit perspective, from a gross quarterly profit, they're not nowhere near profit here. They're incurring loss in 6/30/2021. There's a 14 million loss, as you can see here. We'll watch this trend also. And on the positive side, they're also doing a lot of R&D, research and development investments here. That's a good one. A stock or a company like a Workhorse, they got to put money in the R&D to differentiate themselves from the pack here. That's a good news here. We will jump in and look into a little more detail. So from a competitive landscape perspective, we got various players here. I got here all the EV stocks here just for you to take a look here. And this is sorted by 1 year performance. Few companies at the top here, they don't have a 1 year performance number yet. But as you can see here, they've done nicely in 1 day, 10 day, 1 month, so on and so forth. And one of the direct competitor to Workhorse is ELMS, Electric Last Mile. They are doing nice here. As you can see, stock jumped up nicely. This could be one of the better plays if you want to buy a competitor for Workhorse. This has been doing well. You could wait for a little pullback and buy this company. It's a good company to work here. Right now, RSI is a little high. And then you got few more as you can look through here. Faraday, Tata Motors and Tesla, so on and so forth. There are some companies with nice sales growth here like Tesla, and we got a few more here with nice sales growth. GM, VEV is little $4 stock here, and we got NIO, which is good, Chinese Tesla here, and Solo is also good here. So with that, there is a lot of competition as you can see here, and in this first chart you don't even see Workhorse because their annual performance is not great. That's why they're not even here. In the next slide you will see Workhorse. As you look through here, Workhorse is all the way in the bottom here along with the Lordstown Motors. As you can see here, Workhorse is finally showing some green shoots here. This could be a good starting point for Workhorse here. I think this, if this trend continues, they can slowly make their way in and show some annual progress here from a performance perspective. 5 years they got 4%, which is not too bad. So as you look through here, you've got a few more here. Stocks like companies like Faraday doing great here. Nice sales growth, nice gross margin, and Honda is also doing nicely. And we got NIU, which is a Chinese electric scooter manufacturer. I like this company also. I love to buy this company when it drops after the earnings. That's the good time to buy this. Even Kandi is doing well here. This is also a good one here. So with that, Workhorse is right here at the bottom of the pack here. That's why it's intriguing to me at this time. Stock is down to earth. They seem to, they have not too much revenue, as you can see, just 3 million sales here. But if they can turn the ship around, they're already started to raise from a stock perspective. If they announce a good quarterly earnings next time, it can lift the stock higher. So with that, let's jump in here, look at the numbers. Right now, stock is at $6.84 or so. Market cap is around 838 million. As you look through here from a market cap perspective, these guys are doing okay, not too bad. As you can see here, all the way from 37 million in 2019 to 2 billion in 2021. But now it's almost cut in more than half here. As you can see here, right now it's 838 million. That's why it could be a good one to slowly accumulate at this time and take it from there. And from a sales perspective, as you can see here, 1 mil sales all along. That's why from next quarter onwards, now they have to compare it with 1 million here. That's why comps could be difficult. We'll figure it out. As you look through here from a quarter over quarter sales perspective, numbers looks exaggerated here because these are compared with the zero here, or less low number here. That's why comparison is good here. But as you look through earnings per share here, they're making some progress. As you can see here, it was negative 98, it became negative 35. That's a positive sign here. And they do have a lot of cash, as you can see here, $339 million here in their balance sheet. That's a good one here. Company is not going to go out of business anytime soon. As you look through here, they got debt also. They got $201 million debt here. We'll watch this debt scenario here. It's increasing a little bit. We'll watch out how it goes. And from a debt to equity perspective, it's a little high, but I think it can work as of now. Operating cash flow perspective, it's a little bit not so great here. They're going from negative 36 to negative 48, negative 35 to negative 46. That's not so great here. They should be improving the situation, not degrading further. And from a gross margin perspective, there is some improvement here from a negative 1094. It's actually it's not so great. It's negative here. They should improve their efficiency. I think not so great at this time. Operating margin is pretty okay here. It's improving a little bit. Net margin is also not great. It's not good here. It's more into negative territory, which is not great at all. On the positive side, there's a good R&D investment. That's a good story here. They're putting money in R&D to differentiate themselves from the pack here. From a return on asset and return on equity perspective, it's good here. They improved from negative to positive. That's a good sign here. From a earnings per share, it's pretty okay now, not too bad. And from a price to sales perspective, it's way too high right now. We'll see how it goes. I think as they show more and more earnings, this situation can improve. So with that, from a earnings history perspective, I like to see this chart. This is from Seeking Alpha, as you can see there. So they have been missing numbers in the last 2 quarters. This is one of the reasons why share price collapsed big time. Earnings miss, revenue miss. Earnings miss, revenue miss. Keep watching here. More earnings miss and more revenue miss. So this is why the stock is not doing great. This company is not able to give consistent earnings through quarter in and quarter out. That's why stock is not doing great. If they can start stringing some good earnings history here from going forward, this stock can do well. For example, back in 2020, look here, they got a nice earnings beat here and revenue beat. That's a good one. Again, earnings beat here. That's a good one. But now off late, there is no consistency here. Mostly miss. So I think they have to change this narrative here and start giving the positive earnings that will lift the stock up. So as we look through here from a earnings perspective, we got this new CEO here, Rick. So Rick is basically, saying, Workhorse is a clear leader in a 3 to 5, class 3 to 5 last mile delivery segment. That's a good story here. They also have a backlog of about 8,000 vehicles with agreements and terms and conditions, which is normal. These days folks are a little bit clear about the terms and conditions. Even they got the backlog here. Things can get cancelled, as it happened in their USPS, United States Postal Service contract. That's why they're a little bit careful here. But 8,000 vehicles in the backlog is a good number here. And they're also transitioning from an advanced technology startup to leading manufacturer. I think that's a good transition. I think they will work their way through it. And as you look through here, their revenue is 1.2 million with the compared with 92,000. That's a good number here. A little bit improvement. And they also delivered total 14 trucks in the quarter compared to 1 truck prior quarter in the same year. So as you look through here from an R&D, research and development, the expenses increased. That's a good story. I like companies to increase their R&D so that way they can be on the cutting edge here. And as you look through here, their loss increased here. This is something you got to watch out. We want companies to reduce the loss, but in early stage companies, it's expected they got to do some investments. That's why they show some loss here. As you look through here, they have around $156 million in cash. Company is not going to go out of business anytime soon. That's a good story here. It's mainly because they sold 72% of their ride ownership here. I think they're expecting some money here. Now that's a good one here. So with that, from a quarterly earnings perspective, you can see a company struggling here, trying to turn around. So that's what is going on here. They want to increase their backlog. They want to produce more vehicles, and they also want to produce the heavier payload vehicles, not just light truck. So with that, let's look at the performance over the period. So as you look through here, there are glory days for 2019 and 2020. As you see here, they have done great in 2019 and 2020. This is when most folks knew about this workhorse. This is where early adoption, early adopters really go higher. But now it's not an early adapter anymore. There are a lot of EV plays now. So as you look here, 2021 negative 65%. Then as you look through here on a monthly performance basis, company had done great back in June here, probably around the quarterly earnings, but off late company not doing great. July, August, September, October, all negative. This is one of the reasons I tell folks not to buy call options in stocks like Workhorse, because these stocks get stagnated a little bit or go down. All your call options will get worthless. Even if you bought a 6-month or 1-year call option, look what's happening here. Every month value is eroding, which is a bad story here. On the other hand, if you had slowly bought stock, month after month, you would be okay, because the moment you see a increase like this year, you coop up, you basically gain all your money back. That's the benefit of buying these company stock right away versus buying call options, because call options can erode the value because of theta decay. As you look through here from a weekly performance perspective, as you see, look here, we got monthly performance negative last 4 months, but weekly performance is showing some green shoots here. That's why the company is turning around here. It's okay to slowly start investing here and go forward. And as you look through daily here, also you see some green shoots here. That's why it's okay to slowly invest in Workhorse and go from there. Their quarterly earnings is coming up soon. That can be a turning point. And as you look through here, we got a monthly performance pattern. As you look through here, look what happened in 2021. Negative February, March, April. People got really burnt here. Nice June, then gave it all back here. And negative 65% in 2021. 2020, 2019 flagship, great year. As you can see here, company has done great from a performance perspective. And if as you look through here, then 2018, 17, 16 all negative here. As you keep watching the trend here, keep watching the trend around October, consistently stock has gone down, as you can see here. And September, we got many years where it's down in September. So that's why after September, after October is over, November seems to be a recovery period here. That's why it's good to buy it in October slowly, accumulate a nice position, wait for a turnaround in November time frame, and take it from there. Look what happened in 2019. 3 bad months here, something similar to what we have right now in 2021, but boom, it went up. So that's why it's good to buy this stock slowly, as the company's stock is down right now, and position yourself for a nice uptick in November, December time frame. Normally, January is also a great month for Workhorse, as you can see here. Nice performance January. That's why if you buy and accumulate now, you can reap your benefit as we go into November, December, January time frame. So with that, let's jump in here, look at the insider transactions. Overall, insiders have sold just 0.29%. That's not that's not bad at all. It's good actually. And as you look through here, we got old CEO here, Duane Hughes. I think he left here. That's why he's selling some of his options here back in February and so on and so forth. Now we got the new CEO, and there is some light selling here, not too big deal here. That happens from time to time. So nothing alarming, inside a transaction perspective, things check out, no big deal. And as you look through upgrade, downgrade here, we got one initiated back in August here with a target rate of $10 here. So overall, like we talked about, it's a buy rating for this stock here. Nothing alarming here. $10 is higher than what the stock is right now, which is okay here. So as we look through here, let's look at the technicals here with the stock chart here. Workhorse 2019-2020 were the flagship glory days here. Right now it's against a tough comparison. As you look through, right now stock is at 685 and probably somewhere around $5 could be its a nice support level here. That's why I feel, see here, right now it's trying to go higher. It's consolidating nicely. This is a 5-year weekly chart. In last 3 weeks it's kind of holding a bottom here. That's why I think this could be a starting of a consolidation pattern, and from here it can go higher, especially after the earnings announcement which comes in this month or next. So with that, if you look through here from a daily chart perspective, it's a 1-year 1-day chart. Earnings is coming up sometimes in a week or two. As you can see here, 11.8. Stock is doing nothing of late. Right now IV percentile is 38, which is a little high for you to buy call options. That's why I don't want you to buy call option right now. Buy the stock outright instead. As you look through here, IV percentile is a little bit decreasing now. Look, we got a bullish crossover here in the DMI chart. The blue line crossing over red line. That's a bullish crossover. That's why it's a good one to buy at these levels here. And then as you scan through here on the balance, volume is rising steadily, from 531, and folks are holding a nice chunk of workhorse stock here. That's a good news here. And from a check-in money flow perspective, pretty steady here, nothing alarming. I would have liked it to go higher, but it's okay. And as you look through here, we got your option chain. Keep watching, stock price is around $6. And keep watching here the open interest perspective. We got a lot of open interest at $9 and $10. And even at $15, folks have got a lot of call options at $15. That's why in the options market, folks are betting the stock will go higher. On the put side, as you see here, there is good open interest at $8 here. Somebody is hedging here and buying some put options at $10. And I think somebody also have nice put options at $15 here. They are paying good amount of money here, as you can see. And as you look through the statistics here, calls traded 23,000 contracts, puts traded 5,000 contract. That makes the put call ratio around 0.24, which means there are more calls traded than puts, which is a good news here. And VWAP, as you can see here, is around $6.86, which is above current price here. That means stock can go a little higher. This is a low for today or low for the day. And as you look through here from a overall summary perspective, we looked at the technicals, we looked at the fundamentals. Stock is trying to recover right now. Let's decide what to do. As you look through here, this is a clear leader in class 3 to 5 last mile delivery, and they got nice backlog here. That's a good news here. And they have to overcome some growing pains and make transition from tech startup to full-blown operating company here. That's where they're spending their time. That's why stock is kind of consolidation pattern here. And they've produced around 133 vehicles, which is a good story here. This is where they're trying to be efficient in producing these vehicles here, and they use it for their test fleet and for select customers. And they also deliver 14 of these trucks in second quarter and anticipate more deliveries and lease going forward. And they also are getting customer feedback. That's a good thing here. All these companies have to get customer feedback, and customers are telling them, hey, produce more vehicles with the higher payload. So that's why they're focusing on higher payload going forward, because they do understand the lower payload trucks, the opportunities are limited in that area. So they will work on this higher payload as they go forward. And as you look here, they got a nice revenue increase here from $92,000 to 1.2 mil. I would say numbers are small right now. As they go into next quarter, now they have to compare with the bigger numbers. And as you look through here, I feel company is punished enough at this time. They are trying to do the right thing. I think it's a good opportunity to buy moderately here and hold on to this stock here. As the company announces the earnings, it might go higher. That's why I think we should take advantage and accumulate moderately on the down days and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.